So we have our technical experts joining in to guide you that how one should negotiate this kind of market. Manas Jaiswal, Shrikant Chavan from Kotak and C.A. Rudramurthy from Vashna Investments are today our technical experts. Manas, let's go to trading ideas directly. You have taken IGL and Canfin Home Finance, two stocks where volumes have been substantially high in a market where volumes were less. What's the rationale?
Good morning, everyone. See, Siddharth, that IGL has already corrected, I think, 60, 70 rupees in last 5, 6 weeks. But last week it took support near to 200-day moving average. On Monday, it bounced back sharply from lower levels. It has broken its 100-day moving average. Looking at the charts, I think the possibility is very high that it can recover more and it can test 312. So I think here, even at current levels, one can create long position with a stop loss of 296. Second is Canfin Homes because I think last week it made a bullish engulfing pattern on the weekly chart. Oscillators are showing positive crossover, and on Monday it broke its 100-day and 200-day moving average with higher volumes. So I think here also you can see some more recovery. Here the target would be around 1435. Stop loss should be 1330.
Shrikant, Indiabulls Housing Finance has been fairly active. It did correct with market correction, but has been in a strong uptrend. So you continue to maintain a buy call over there, and BEL, that is also a buy. But volumes in last two sessions in BEL were, disappointing.
That. Yeah, I think, see, like for Indiabulls Housing, the call is very clear that it is outperforming stock of last almost 12 months, and it was somewhere close to 650. From there all the way to went to 1400 levels, and when the market was down, the recovery was like much more like clearer in terms of volume as well as price. So I am of the view that it is going to outperform in next at least a few weeks, and the way it recovered from lower levels this time also, we are of the view that it is heading for minimum 1370, 1340. But if we take a view of next few weeks, then I think 1500 is the level to watch out for. So currently I think the stock is available at a very a decent risk reward ratio, with a decent reward ratio of let's say 1280 we can keep as a stop loss for the trade, and we can keep target of 1380, 1390 on the high side for the day or for next 1 or 2 days of time. For Bharat Electronics, yes, the volumes are like not that great when it was falling, but if you go through with its last 4-5 trading sessions, then when the stock was close to 150 levels or 145 levels, that time it the stock has attracted huge amount of delivery based volume as well as trading volume. It is maybe because of the stock is coming out with some buyback plans also at 185, 188 price. Currently the way the stock recovered from 145 to almost 160, we feel that in last 3 days the stock has formed some pennant kind of formation, and it is ready to move to the next level, which should be in the range of 175, 180. So at this price again, the risk reward ratio is favorable for traders. One can look for adding long position in Bharat Electronics with a stop loss at 153 on the downside, and on the high side we can expect 173, 175.
Yes, BEL has been seeing strong volume action since 1st of Feb, or in fact since 30th of Jan, but last 2 day volumes have not been great. Shrikant is pointing out that give more weightage to the volumes which has taken place last week, where he has observed some accumulation. Rudra, good morning. Welcome to ET Now. Of all the stocks you're selecting JP Associates, I understand this is near support, but why give calls in such name where people have not made any kind of wealth? And REC Limited, that's an interesting observation. Stock is showing some bounce back. What's the rationale over there?
Good morning, Siddharth. See, first of all, on JP Associate, 17 rupees has been a strong support, and last 4-5 days, lot of consolidation has happened, and even accumulation is seen with delivery-based buying happening in JP Associate. Even in F&O market, I am seeing open interest built up both for February as well as March series. For me, JP Associate gives a very good risk reward for traders to enter at current level, because support of 17 is holding very strong and it is bouncing from those zones with additions in open interest in F&O market. One can have a target of 20 rupees on JP Associate with a stop loss of 17 rupee 80 paise. When it comes to REC, again this stock is finding this strong support zones and it is bouncing from those levels of 140, and again for both March as well as February series, open interest is seen getting built up on the positive side. So for REC, I look at immediate targets of 160 with a stop loss of 145.
Okay. Okay, JP Associates, just an observation from my end, 2% rise in open interest, that cannot be, termed as very significant rise in OI. Nevertheless, Tanveer, our traders and investors should be very cautious when it comes to, these names which have perpetually shown a downward trend.